What's up, traders? This is Hugh, and in this video I'm going to show you how to draw support and resistance lines with confidence. Now, I'm sure that you've tried to draw support and resistance in the past, and you found this video because you are a little confused, and rightfully so. It took me a while to figure out how to draw lines correctly, and I hope this video makes that a lot simpler for you to understand. Okay, so first of all, let's go over a few basics, right? First of all, why does support and resistance work? Some people say that it doesn't work, some people say that it does. And what I've seen in my own personal trading and what I've seen in professional traders is that support and resistance does work. You just have to know how to use it. So it works because any asset, anything that you buy, whether it be a car, a house, or a currency pair, is going to be expensive at a certain time and it's going to be cheap at a certain time. So let's take a look at how that works real quick. So for example, if we move through this Euro USD chart and we look at the real micro moves here, you can see at the bottom of the chart here that during this time period, anything above this orange line is considered expensive and anything below it was considered pretty cheap, right? So price would fall down to this level basically. And once it got there, traders were like, oh, this is cheap, so we're going to trade it back up. And then once it got up to this expensive level, then it came back down. And that's no different from when you buy a car on the secondary market. Like you buy a used car and you're looking through Craigslist or whatever, right? And you're going to see the price of a certain type of car that you want start to go up. And once it hits to a certain point and people are no longer willing to pay that amount, then it's going to go down. And that's what we see here, up and down, up and down, up and down, until something fundamental about the market changes, right? For example, maybe there was a lot of supply of that type of car, and now it's more rare, so that's what's making the price go up. Or maybe the car became highly collectible, or maybe a famous person really likes that car, and everybody's just following that person. So there's a variety of reasons why the price could go up beyond this what was considered expensive before. And this in the markets that translates into news or interest rate changes or whatever fundamental things are going on that can affect what is considered cheap and expensive at the time. However, whenever we are in a range like this, there are trades made at these ranges, and there are at the extremes of this range, and there are trades made in the middle. But the market has a memory because there are trades at these extremes. For example, this was considered cheap at one point, right? And you have to think about how the traders reacted to that point. They saw, oh, look, cheap. So they bought it, went up, came back down, and now they're down here and they're like, oh crap, we still have some trades at this level, and the price is broken down here. So let's hang on and let's see what happens. And then price comes back up. Oh, yay, we're at break even, right? So we're going to get out. Boom, price comes back down. So it's all relative according to the time period, what is considered cheap and what is considered expensive. And that's what creates support and resistance levels. And it's the same thing in any market. The Forex market is very dynamic, and there's so many things going on in the world that it changes constantly, and that's why you don't see a very defined range. But if you understand that support and resistance levels is nothing but what traders consider cheap and expensive, then it starts to make more sense. Okay, so if that is the case, then why do these levels break? Why do traders break these levels? Like I mentioned before, it could be a fundamental news item. It could be, let's say, like there's a war, or there's some sort of political turmoil somewhere that could cause the resistance or support level to break, and that's what we saw here. And the support and resistance level is very useful because you can use it as both a support and a resistance level. So for example, here it was a resistance level when price kept on trying to break this level, but it couldn't. But then once it broke, then it acted as a support level. And this is how they're useful. You can use them to enter trades, you can use them as profit targets, and you can use them as stop losses. So in this example, if price broke out, came back to this pretty well defined area of resistance, now turn support, you could put a stop loss below this level, and you could see if that trade would have worked out or not. And it's important to remember that support and resistance levels are not hard lines in the sand. They are, that's to say, price is not necessarily going to turn at that level, right? You have to think of a support and resistance level as more of a zone. So if we draw in a rectangle here, if we look at this support and resistance level, the zone looks a little bit like this, right? Maybe down to there. Okay, yeah, so that's more of where the zone is. So if price, just because price hits this line or hits your line, it's not going to necessarily turn there. And same thing if it breaks out, it's not necessarily going to turn there, although it did turn here. But it's more of a zone. So what a lot of traders do is they will enter somewhere inside the zone and then put their stop loss on the other side of the zone, and that can help prevent from getting you stopped out too often. All right, so now that you have a basic understanding of why it works, why it breaks, and how to get started with it, let me show you how to draw them. So it can be pretty confusing actually to draw these lines, right? There are so many places where a support and resistance level would work. So let's take a look at that. So in this case, you can see that we can draw a support level around here. You could make a case for a support level or a level around here. You could make a case for a level around, possibly around here. And we'll put in one more. Let's do something down here. You could make a case for a level here, right? That's not very good. Maybe a little higher. Yeah, something like that. So where do you draw the line? How do you know which support and resistance levels to watch and which ones to disregard? Well, it's not an exact science, but what you're looking for is probabilities. What is the probability of price reacting to that level? And to increase your probability, you're going to look at previous price action, right? If price has respected that level a lot more in the past, the probability is higher that will be an important support or resistance level going forward. So in this case, if we look at this first line here, price respected it basically 1, 2, 3, 4, 5, 6, 7, 8, 9, about 9 times, right? And it doesn't have to be an exact count, but that's about right. Whereas this level here, it's really hard to tell how many times it respected it because it's going through a lot of price action. So this probably wouldn't be a valid level. So we can get rid of that. Same thing with this line. It's going through a lot of price action. There isn't a lot of clear support and resistance with this level. And it's not bad, but like as you can see here, price kind of violated that area a lot. And then it kind of fell short here. So that's not quite a good level. So we can get rid of that. This level, however, is pretty good because as you can see, maybe move it down a little bit. Yeah, so price respected it here. Price respected it all through here, except for that little part there. And price respected it around here. So that's a pretty good level. So you want to get started by looking at your current price and just draw the first, the closest support and resistance level that you can find. So in this case, price is up here. So the next major support level would probably be somewhere around here. So I would play with this line until I could find a level that makes sense, or a level that goes through quite a few of the price points. So I think something in that area would make sense because you can see a strong rejection here, strong rejections there, and a strong rejection in this area also. Now you could move it down to these other levels, but then I think that would not make a whole lot of sense. And then if we look at the bottom of the chart, we could draw another resistance level or support level here, and I would say I would put it right around here because it goes through most of the important levels, and maybe a little bit lower. Yeah, something around there, because you can see price strongly rejected it there, strongly rejected it here, 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 and here. So that's a pretty good support level. But anyway, like I mentioned, we should. I got a little off track there, but we should find the next support level in relative to current price, right? So if we look at a level above price, I would say it's right around here, because it's kind of a turning point, right? Price rejected it, came under, and then it became resistance and it came down. So these are the two levels that major levels that I would look at. That being said, you can zoom back in, and now you can take a look at what's going to happen. And it's really tough to create any type of support and resistance trades here because it is so far in between these levels. So this might not be something that I would touch. This is probably something I wouldn't touch for a while until it can get to another level that makes sense, at least from a support and resistance perspective, right? Okay, so now that's fairly straightforward, I hope. But what happens if you have more complex price action and it's not so straightforward? So for example, let's scroll back. Okay, so take this area right here. So where would you draw a resistance line and a support line? So by looking at the price action, I would probably draw it right there, and then I would draw another one right around here, right? And a lot of people would possibly draw it above this high and try to put it below this low, and that I found that doesn't really help you all that much, because this is an extreme in price action, and you want to be capturing a majority of the moves. So you want to find out where does price react very, very strongly, and that's where you want to put your line. So right here is a very strong reaction, right here, right here was one, and even though this had some heavy downward momentum, it stopped here, and that shows that it's a significant level. So that's where I would draw that one, and then same thing here. Having price action at these levels, and I think this one is a little more obvious. So it's important to look at those levels and not just draw it on the high or the low. And another thing that I mentioned in my blog post was looking for the elbows. So an elbow is an area that's bent, like your elbow. So this would be an elbow here. This is like the tip of your elbow. This is the inside of your elbow. And a lot of times it's useful to draw the trend line through the elbow where it bends, and this goes for a support level or a resistance level up here. So you can see right here, this is kind of an elbow right there. You see consolidation within or above that line, right? And that helps you to put the trend line or the support and resistance line in the right place. Otherwise, you might be sticking it outside here, where that doesn't make a whole lot of sense. So remember that you can violate the elbows, and it often turns into a good place to put a level. Okay, so before I wrap it up, one more thing. What if it's really, really hard to figure out where a level is, or if there are any levels in your area? Okay, so that's pretty simple. What you want to do is you want to take an area that's maybe not so clear. Let's see, what do we got here? Okay, so let's take this price action here. So where would you draw a resistance line on this uptrend? You could make a case for putting it here. You could make a case for putting it here. So let's put it there for now, and let's just say that this is what we see so far on the chart, right? So it's kind of tough to tell. I mean, you could put it up here because it touches 1, 2, 3 highs, or you can move it down a little bit and touch a lot more points, but you might be a little skeptical, right? So what you can do in that case, whenever the candles don't give you a clear level, you can switch to the line chart. And I learned this from Walter Peters, and I find it very effective. And you can use this just to double check if you're putting your lines in the right place. So these are the closing lines for each period, right? So in this case, I think that was a pretty good line because it matches up with this, and you're kind of in the elbow there, and you got 3 touches there and a touch there. And then when you scroll back a little bit, you can see that it touches here, and this was a fairly significant resistance point right here, right? So I think that's good. So if we switch it back, we can see that that's a good place to put it. But if you're just looking at the candlestick chart, it might be a little confusing, especially when you look at this price action here and this price action back here. Okay, so that's about it. That's how to draw support and resistance levels with confidence. I know it's more of an art than a science, but if you keep in mind that you're looking for a zone or just a general area where price is very likely to turn, then I think drawing support and resistance becomes much less stressful and a lot more useful. So I hope that helps. If you have any questions, leave them below, and I hope your trading's going well. Thanks for watching.